Hello everybody, welcome back. We're going to look at derivatives, margin trading, futures trading, and we're going to look at three platforms really, but there's two that we'll focus on, and Binance can basically do what both of these do anyway. So whether or not you choose to go for any of these three, Binance can accommodate for both normal futures trading using USDT as your contract deployment, and also for your profit, so all done in Tether. There are some other variations of that, and Bybit, which is mostly coin futures, where you can basically your balance is, let's just say, Bitcoin or XRP, and so when you borrow from the broker, you borrow in the form of a cryptocurrency, and when you take your profit, you're given XRP or Bitcoin or whatever it is that you're trading. So the difference is, if I'm either trading with Tether or if I'm trading with cryptocurrencies like Bitcoin, Ethereum, XRP, EOS. But Binance can do everything. Whether or not you choose to go with Binance or not is up to you. I often find that I prefer to actually have separate things. So for futures trading with USDT, I actually use Bityard. There's a few reasons for this, but whether you choose to use Bityard or not, one of the reasons I thought I'd mention it is that they have a demo account. So I know a lot of people use margin trading anyway, and this video probably isn't for you. This is for the people, I suppose, from my Patreon and other people who have left comments that want to know more about it. So the first thing I'd say is that I don't use it very often. It's highly risky. If I ever do any kind of futures trading, I'd have to be 100%, well, not 100%, but very confident that a move is going to play out, and I would not be greedy at any point. Most people lose money on futures trading, doesn't matter how careful they are. It comes with practice and experience, and unfortunately, you're not going to get practice and experience without actually having practice and experience. Unfortunately, to my knowledge, no exchanges offer a demo account for you to practice on apart from Bityard, which is something you can do here. So I'm on the demo account here. You get about 50 grand's worth of practice Tether with, and you can practice your skills. Now, if you don't know what is going on here, there's not at any point on this futures trade would I ever own any Bitcoin. All I'm doing is essentially I'm making I'm placing contracts in the form of USDT that I think this is going to go up or down, and I will profit from that to a large extent if I wanted to increase my leverage. And all leverage is that if I have, let's just say, $1,000 that I wanted to put in, I would use leverage. So this is a drawback, I'm afraid, with Bityard, is that the minimum leverage you can use is 5x, which is quite high for new people. Okay, so that's quite high for inexperienced people. But as this is a demo account, it's no big deal. But normally, 5x is quite. I would consider that to be quite high. So by having $1,000 of my margin to place the contracts with, I'm timesing that by 5, so I'm actually trading with $5,000, not 1,000. The other money has come from Bityard. They're nice enough to lend it to me to increase my profits if it goes up, but if it goes down, they're not nice enough to let me lose their money. So you will lose your money to a zero balance quite fast. So what this means is, let's just say that I increased this to 10x and went completely crazy. I'm going to go 10x with $1,000. That $1,000 is now worth $10,000, and if this goes down by 1%, that's a 10% loss. If it goes down by 2%, that's a 20% loss, because the 1% that it goes down is emphasized by 10 times, because the leverage is 10 times, and Bityard will not want me to lose their money. They're happy for me to lose my $1,000, but they will not want to lose a penny of their own. So if this went down to 100%, I lost 100%, which again is 10% down on this chart. I lose my $1,000 completely. I have nothing left. So you might think, well, that sounds way too risky, I'm not going to do that. Well, and I would agree, you probably shouldn't do it. But if you wanted to, practice. And the good thing about Bityard is that you can automatically set your take profit and stop loss. You can set this, and I would always have my stop loss ratio between 10 and 20%. I would never have it any more than that. And this means that if I lost, if it went down by 2%, I would my Bityard would close the trade for me. I would lose 20%, which means I'll be left with $800. I'd lose $200, and I just have to suck it up. and deal with it. I will not lose any more than that. That's risk management in the most basic form, but I wouldn't do any of this trading unless you have at least a medium understanding of what's going on with the price. Otherwise, you're just gambling with it. So that is a basic overview of what futures trading is with USDT. So standard futures trading, where you're buying and selling contracts, or going long or short, but not at any point owning any cryptocurrency. It's all done in Tether. So if I thought this was going to go down, thinking this is going to go bearish, sell is to short. So if this goes down, I make profit on the way down. If I think it's going to go up, I go buy, which is long, and make money on the way up. I'm sure you already know this, but this is basically the deal with it. So there's a basic overview of risk management, a basic overview of what leverage is, and going long and short, and all the profit is made, and all the losses are made in USDT. Now the other option, which is something that's a bit more interesting, especially in a downtrend, I find, you might disagree with me, but my overview of the market is generally bullish in the long run, is coin futures. And what that is instead of using USDT as my balance, I could use actual cryptocurrency like Bitcoin, Ethereum, XRP, and the main place for that is the first place, and the place that does it best would be Bybit, right? So Bybit's been around for a while now. To my knowledge, it's never gone down or anything like that, and there's not many options. Your coin futures are limited to XRP, Bitcoin, Ethereum, and EOS, actually, which, love it or hate it, I do quite like it sometimes. But the way that this works is that my balance in this instance is in XRP. So I've got XRP loaded up into this account. It's in my wallet, ready to be traded with the use of leverage. So for example, I put $1,000 in here with 5x leverage. That means that I'm not just trading with $1,000, I'm trading with $5,000 worth of XRP, which is that's $1,000 worth, but times that by 5 is it's more than that. My maths is not so good this time in the morning, and I can go long or short. And the beauty of this is that if I went short on this one, I would be making some decent money. I'd be making the same amount of profits that I would be doing on the Bityard, for instance, but my profit would be in the form of XRP. So when I close the long or close the short, my profit is in XRP, which, love that or hate it, it's good for me, especially in downtrends, and especially when XRP is, for instance, XRP, I'm just using as an example, is down at this level. I will make more XRPs in the form of profit than I would do if I was doing coin futures at a higher price. So if I was doing coin futures around here, or at its all-time high, for instance, you wouldn't be making that many back. It'd still be the same amount in the form of dollars in the short term, but if we were entering a downtrend, it wouldn't be the same. So the beauty of it is that you get rewarded in cryptocurrencies, altcoins or Bitcoin, depending on what you're trading. So I like it in times like this because I could make more XRP back from doing simple trades. I could do a small trade and make 100, 300 XRP, and that's good because I see XRP increasing in value over time. So I'm okay with that. I feel that that's better than doing it with Tether in many ways, depending on the coin that you're trading and the state of the market at the time. If XRP was trading at $3 or something, I wouldn't be interested particularly in going long on it with coin futures, because I would be getting a much less XRPs back. But it is a good idea, I think, if you're thinking about being in this for the long run and accumulating not just XRP, but any of these particular coins that you want to get, then think about it in terms of that. Your profit will appreciate in value over time if you believe that the market will do that. Obviously, if you're not a fan of the market, then you'd probably prefer Tether or some other options. I know you can do it with fiat currencies, for instance. So that's an overview of the two and why they're good and why they're bad, what it is that they're doing, and some of the platforms that you can use. Now, both Bybit and Bityard's capacities to trade, whether it's Tether or coin futures, both of those can be done with Binance futures. You can have Binance futures here in both normal futures or coin futures. But I find that as good as Binance is overall, It's like a jack of all trades and a master of none. It's great for spot trading. It's the best, I think, for spot trading. For futures trading, it's just got a little bit. It's just a little. They've got too much going on, and it's very easy to use. It's as easy as anything else. But when we're looking to get in and out of a position, nice and fast, I prefer these other two. The liquidity is much better, I think, for coin futures with Bybit, and the interface, as much as it looks like a Mickey Mouse setup here, the interface is so simple and nice, and the risk management is easy to deal with on Bityard. The only drawback is the fact that you can't do lower than a 5x leverage, whereas with Bybit and Binance you can go all the way down to 1, which again is not a bad thing to do. You can move your leverage down to a 1 if you want to do a small trade, or a trade that's going to take a long time to play out, like a long-term position. There's nothing wrong with that. There's absolutely nothing wrong with going to 1x leverage. I'm not joking. I have done 1x leverages many times. It's nothing to be embarrassed about. It's all profit. All right, it's all profit. So don't let people go, ugh. The idea is not just to make money, it's to preserve your money, all right? And you don't want to take losses, unnecessary losses that you don't like. So that's the only reason I don't, and I hope that they come to change this, at least to move it down to a 2x or something. 1x is maybe a bit too low for the majority of people, but 5x is a minimum. It's too high for people that want to learn this. But again, set this up if you want to learn it, just to use the demo account. Anyway, with anything, practice and experience is going to make you better. And when I'm talking about practice and experience, I'm talking about taking it seriously. This is pretend money, but pretend it's not real pretend money. Make out that this is your real money. This is proper skin in the game. Plan your trade. Don't go crazy. And I know it sounds silly and tedious and boring that you're going to spend, hours, maybe sometimes days waiting for a trade to materialize, and then you're going to just do a dummy trade, and then by the end of that, you look at it and go, oh, I could have made $1,000 if I did that in real life. Yeah, you could have done, but you chose to do the right thing and learn. So that's one successful trade done for you. Well done, congratulations. Let's see if we can do it again and again and again and again. And if you get the hang of margin trading, if you do get the hang of it and you become good at it, then it won't take long for you to become rich, because it can make you some significant gains. But if you don't get the hang of it, and if you end up not being very good at it, or if you don't have the discipline or the patience or the knowledge to use it, you'll become poorer than you were when you started, and you wish you would have just spent that money on buying some Bitcoin and just leaving it to mature over time. I'm not joking when I say this. There's a rule which is called the rule of 90-90-90, which is that 90% of people lose 90% of their portfolio balance within 90 days. So that means that the odds are well against you, because most people are not able to do this. Most people can't do it, whether that's they don't have the understanding of the charts, or they don't have the emotional discipline to stick to their own plans, or a number of other reasons. There's all kinds of reasons why you wouldn't be able to do it. So the odds are against you. But if there's 10 people, there's one of those people that might be able to do it, and that one person could be you. But you'll only find out through practice and experience. And if you do want to do that, then you might as well do it with pretend money. And I know that sounds so lame. I'm not joking. I know how it sounds, because you want to become rich fast. You want to make the money fast. But remember that the odds are vastly against you. And if you want to take it seriously, practice on a demo account. Don't go straight in at the deep end. You will regret it, because the chances are you will be one of those people that can't do it, because that is the fact. The chances are you are one of the 90% of people that can't do it. So understanding that and recognizing that, the only way you'll find out is if you take it seriously and practice. So best way to do it is with fake money, and to my understanding, my knowledge, that Bityard is the only place that will allow you that facility. So hopefully that made sense, whether you're doing normal futures or coin futures. I've given you an overview of the risks, the benefits of using, I suppose, any of these. But if you were to practice, do practice with a demo account. Don't go mad. There's links in the description below for all of these accounts if you want to set them up. If you probably have them already, but if you don't, you can set them up. There are perks for you if you choose to set them up with those links. But otherwise, just focus on Bityard and getting your practice in, and if you end up being good at it, if you can make more successful trades than you make bad trades, because no one makes 100% successful trades, then maybe you are ready. But don't practice for a day and think to yourself, I've done it now, I've made more successful trades than negative trades. Practice it for weeks and preferably months. Because if you're able to do it, if you end up being in the 10% and you've proven that to yourself over a period of, let's just say 2 or 3 months, it might sound a long period of time, but if you can practice it and end up, making 10 times your balance on here, and not just from pressing buttons and hoping for the best, but planning trades, understanding what's going on, then it sounds like you might be one of the 10%. And if that's the case, you will be so grateful that you took the time to practice it before you went in, because the chances are that you probably aren't in the 10%, but some people will be. But practice for, like, I'm not joking, months, not days, months, and be consistent about your approach, and don't take this fake money for granted. Pretend it's real, treat it seriously, learn the craft, because if you do learn it, you will be, like I say, you can get rich. You can get rich. You're basically pulling money out of the internet. But recognize that you're probably not going to be in the 10%. But don't let that deter you from trying to see if you are or not. Anyway, I'll leave it with you there, but thanks for watching. Hope you have a nice day. Take it easy.